Welcome to Strategy Saturday. I'm Charles Carillo, and today we're going to be discussing title policies and title insurance. The first title company was formed in 1853 in Pennsylvania, and title insurance is covering past issues, not future issues. So when you're purchasing property insurance, that's covering liability and future possible damage to your property. With title insurance, you're purchasing it to protect you against past issues with the title. It is paid one time and covers you for as long as you hold an interest in the title. The process for issuing a policy is reviewing real estate records to determine who the true owner of the property is, and then find any liens or encumbrances. So how does it work? Well, title insurance is insurance policy that covers the loss of ownership in property due to legal defects. What are those legal defects? They could be undisclosed heirs, illegal deeds, forgery or fraud, lack of authority of the person signing the deed, errors in public records, liens and encumbrances that have not been properly removed, unknown easements, or survey issues. There's going to be a title search that's performed. What they're checking in a title search is legal descriptions, building renovations, something done in the past that was not permanent or not correctly permanent, zoning changes, multiple owners. It's going to verify ownership is accurate. It's going to verify deed, mortgage, and easements. So what is the process to ensure a property's title is cleared? Well, first off, title insurance is ordered and the record search occurs. Then title examination happens, whereas the title insurance agency starts the review by analyzing the documents of record and evaluating them and their impact on the title of the property. Then the binder or commitment is issued. The title officer issues a title commitment on behalf of the title insurer, and the commitment details the amount of insurance, the insured parties, requirements to be met for the policy to be issued, and any exceptions. The title is cleared of any clouds. So a cloud on a title is an irregularity in the chain of the title, the ownership chain. For example, an open judgment on the property, the title officer would contact all parties involved to get the judgment paid, thus clearing the title. Next, the closing and payment occurs. The buyer pays the one-time premium at closing. After the closing, the title agency issues a policy on behalf of the title insurer. So what does title insurance actually cover? Unknown title defects, unrecorded liens, not properly recorded liens, encroachment issues, legal description mistakes, issues with survey versus legal description. So meets and bounds, matches the survey, errors in public records. Now, what to look for? So there's a couple different sections of the title policy. Schedule A verifies the title is vested in the same exact entity of the seller in the contract. It confirms legal and physical addresses match. It confirms date of the title report. It will tell you what type of policy it is, a lender policy or an owner policy. So it tells you who's it protecting. A lender policy does not cover the buyer, and a lender policy would be for the loan amount only. It's going to be with a owner's policy. It's going to be for the total amount of the purchase price. Legal description. Now, the legal description is also in the Schedule A, and the attorney will confirm that the meets and bounds description in the vesting deed matches the legal description in the Schedule A of the title report. Then there's your Schedule B. It confirms liens and mortgages reported against the property and reviews existing mortgages, if any, who the lenders are, and the amount borrowed. It's going to do municipal searches. It has contract protections. Your attorney should handle this. This is part of it where it makes sure that you have reasonable amount of time in the contract to provide objections to the title of the seller. And if there are any issues, make sure the seller is taking care of it. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. Look forward to 2 more episodes next week. See you then.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars Incorporated exclusively.